Good morning, everyone, and welcome to Weekly Profit Talk. As you might imagine, we do this every single week. It's Wednesday morning, 8:30 a.m. Mountain Time. We're coming to you live, and we do this every single Wednesday at 8:30 Mountain. That's 7:30 if you're in California and 10:30 if you're out in Florida or New York. So um, plan ahead because we do this every single week. Good morning, welcome. We hope you're staying as cool as possible in this early August. We've got a bit of a heat wave here in Colorado. It's been over 100 degrees the last couple of days, so stay hydrated, and if you have air conditioning, stay inside. So anyway, let's go ahead and we're going to start with this week's topic, and that topic is your medical practice paying you a defensible salary? Um, this is a topic that is of interest to anyone that is an S corporation. What that means is that you're being taxed as a corporation. That money flows through to your 1040. Um, this allows you fantastic tax savings because you're only taxed for Social Security and Medicare on the um, wage portion of your income. The remainder, or net income, from which you can take distributions, actually is taxed only at ordinary income tax rates. But it raises a very good question. Are you taking a reasonable compensation? The IRS kind of insists that you do that. So their theory is basically they want you to take a compensation which is considered reasonable for your position in your industry with a caveat, which is basically something that I've been doing for the past, well, it's been almost 10 years now, actually, 9 years that we've been in business. And that is that if you, say, for example, are some sort of a specialist and your peer group in hospital groups is basically commanding a $20,000 a month salary or 240K a year, let's say that's reasonable for your practice, but you've only been in practice a couple of years, you're only netting $200,000. Well, you're not going to take a $240,000 salary for money you don't have. So that's where the reasonable comes in. Now, let me just go over a few important points. Salary does carry that payroll tax, and that's what we call FICA, your Federal Insurance Compensation Act of the mid 60s. I think Johnson signed that in. That's Social Security and Medicare, is what FICA means. And you do pay that on your salary. This is tempting. You may want to deflate your salary and inflate the distributions that you take so that you're paying a very nice small FICA bill. There is a problem with that. It's one of the most dependable S Corp audit triggers, and a physician makes an unusually bright target because people think the doctors make a lot of money, right? Um, Nobody is ever going to believe that your clinical work is worth $80,000 a year when you're making over $400,000 after your salary and all other overheads. So um, that is where you've got to strike a balance. Your own competence, in other words, can actually be used against you if you want to look at it that way. So now here's a real framework that I use for determining salary, and let me share this with you. You need to pay yourself the lesser of two different numbers. Okay. One of them is roughly half of your practice's net income. Let me go back to that 240K, for example. If you're only making $200,000, my suggestion, I like to try to hit a target that's just under 50%, 40 to 50, I feel comfortable with. This has been defensible in tax court cases for S corporation audits in the past. And that's how I arrive at these figures. I didn't just pull them out of thin air. So um, let's say that $200,000 you're taking 96 as a reasonable compensation. Well, that's going to be, um, if my math serves, 48% of all the money that you're making, which is your wage plus your net income. Okay, so that's a good target. $8,000 a month is reasonable for a practice that's only making 200. And then you're going to have $104,000 in net income from which you can take distributions, which are, of course, subject only to ordinary income tax. So that is one of the two numbers. Roughly half of your practice's net income. The other, I've actually made two bullet points for. The cost to replace yourself yourself at a rate appropriate to your geographic area, or what you would actually have to pay someone to do your job where you practice. Okay. So, what this means is simply this. Let's say your practice is now booming and you're taking in 800, 900,000, $1 million. And this is a time where you need to take that $240,000 net income, because if that is the cost of replacing yourself in your geographic area, then that is considered reasonable. And the good news is this, as your fortunes rise and your private practice is making more money, you're going to have more money left over in net income that is not subject to any kind of tax at all. Now, you know there is a ceiling on Social Security wages. There are people in Congress that would like to see that lifted or increased dramatically. I think right now it's sitting around $170,000 a year, after which you're no longer taxed at Social Security, but you are taxed infinitely on Medicare. Okay, so just keep that in mind. As no matter how much money you make, you're going to be paying that. I think it's 1.45%. So half of that is your wage. 0.62. Hang on, I can do math. It's 0.72. Well, anyway, that's close to that. So the point is this. You are going to owe Medicare tax on any salary that you take, even if you're a highly skilled surgeon. Let's say you uh, basically dissect human brains, for example, and put them back together and help people with that. Like you're one of the shepherds from Grey's Anatomy. So you're probably going to be worth about $500,000 a year. If your practice is making over 1.5 million, you better be taking that 500,000 as reasonable compensation. And again, the remainder of all the money you make, taxed only at ordinary income tax rate. So now, if the first number eludes your understanding, that's perfectly understandable. Okay. I use the same word twice there, but the thing of it is, as a doctor, you've got a lot of numbers already, but these numbers aren't fiscal in nature. Basically, things like lab values, diagnostic readings. Um, I think I even mentioned when you ask a patient, what's your pain level on a scale of 0 to 10? So you've got numbers in your life, but the thing of it is the 9 to 11 or 12 years that you spent educating and then training, a residency and all that, precious little of any of that was spent in business school. So it's understandable if you don't have a grip on what your net income is relative to your wage. That's what a good fractional CFO does for you. And that's why I'm here talking to you today. So it's understandable if you don't have that. You can't be expected to pay yourself money that you're not actually generating in cash. And I covered that. Okay. Now, your second number, replacement salary, is one that most owners never bother to calculate. And I'm going to tell you simply how to do this. Go online. There are 3 or 4 websites that will give you the salary for the zip code that you work in. That's defensible. Okay. I know that there are companies out there. I can think of a couple that actually charge several $100s to give you a report of what a reasonable compensation is in your area. You can get that answer a lot faster and for a lot less money through channels now. So, um, but you can go either way, certainly. So, absolutely have that option. Now, what happens when the number can't be defended? This is why this is important. When the IRS decides that your salary was too low, first thing's going to happen is you're going to get one of those puckering up number 10 envelopes that you get and says IRS on it. Okay. So you're like, oh God, what now? And you open it up and they're going to basically tell you that they're going to recategorize your distributions as wages. Okay. Language might not be like that, but that you'll be subject to some sort of an examination under an audit. Chances are it will be worded as they're going to do some sort of an audit. And there are 3 levels of those. They can do it on the phone, in the field, or in their office. Um, Audits aren't all that scary, particularly if you already have representation with an enrolled agent or a CPA. Okay, so I'm an enrolled agent and I do representations for people. They're really not that bad if you go armed with the information. I make every one of my clients audit resilient. There is no such thing as audit proof. Okay. Anybody can be audited. However, and there's a big however, there are people for whom the probability percentage of being audited is significantly lower. And it's certainly lower if you have an enrolled agent or a CPA as a guide and a fractional CFO helping you through the minefield of fiscal responsibility. So, um, if they do decide and you lose your case, basically, and your distributions are recategorized as wages, then you're going to pay back taxes, all the interest on the back taxes, starting accrual from the day that they were actually owed to begin with, and they're going to throw penalties on there for you. And it's all calculated on money that you've already spent and paid tax on once. My accountant did it. It's not a defense. It's a confession that nobody ran the math. Okay. And by accountant, there are several different levels. As a fractional CFO and business advisor, I basically work with people on a monthly and even weekly basis with meetings and continuous predictions and projections, cash flow and profit and loss budget projections in particular. Um, your typical practice has possibly a bookkeeper, maybe in-house, maybe a VA, and you hire a tax guy once a year, basically turn all the numbers into a tax return. It's a history lesson. We've been talking about this in the past, and if you would go to my blog, owings.com, um, I'm sorry, owingsllc.com/blog. You'll see topics to these conversations. In the recent past, I've been talking about exactly this topic, which is the fact that a tax accountant that you see once a year is basically not going to be able to predict the future or even tell you about the present. They're basically giving you a history lesson based on a year that's already elapsed. So your defensible salary is not set and forget. Your net income moves. If you happen to be lucky and you've got some sort of subscription service, make the exact same amount of money each month, then your money is easier to predict. But chances are 95% of you do not fall in that category. And you're going to have fluctuations in your business. Maybe you get busier during cold and flu season, for example, late fall and during the winter. Oops, sorry about that. Um, so your income shifts, and with your income shifts, you need to actually be keeping an eye on your salary month by month. At the very minimum, you should be making quarterly adjustments. You need to read it frequently and you have to adjust. Okay. So, um, is your medical practice paying you a defensible salary? That's a fine question. If you'd like more help with this and are coming to the decision after hearing this that you would like expert help, I would like to share with you that I am coming to you live or possibly in replay on one of three media, Facebook, LinkedIn, YouTube. All three of those have a comment capability. You can write, go to the comments and go help, more info, free call. My first discovery call with any physician is absolutely free. It's a chance for us to get to know each other a little bit, ask you a few questions, see if it resonates to work together. Most likely, if it does, and more often than not, if that is the case, then we move forward and talk about how much and what we can do for you. And we're actually able to come in various different tiers of service. Business advisory is changing the face of accounting. It's something that AI is not going to be able to replace. Okay. There is no substitution for the human touch when it comes to um, moving the chess pieces around um, in accurate scenario-based models. So, with that, I hope you found this helpful today, and I hope that your August is starting out well so far. I hope you're having an amazing morning and have a great rest of your day. And for goodness sake, stay cool, stay indoors, drink plenty of water. And if you have a chance today, do something randomly kind for a stranger. So until next week, Wednesday at 8:30 Mountain Time, this has been Weekly Profit Talk. We'll see you next week.